Good evening, this is Giuseppe Basile. I'm the analyst at trader. You can find me at the blog fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening. Today is Sunday, June the 3rd, 2013. It's almost midnight in Toronto, and in this video I'm going to review for you the daily charts of the four markets I follow: the Euro FX currency futures contract, the dollar index futures, the S&P500 futures, and the US dollar versus the Canadian dollar forex pair. What you see on the screen is the daily chart of the Euro FX currency futures contract. As I reminded you in the weekly review, we had the violation of shorts mid next week, and in the past, during the month of June, we had in the past weeks we had also the violation of longs here, and we can see that longs went above this 33.55 of about 34.20 of about 78 pips, and we actually could see the same here. Price going to 78 pips, so below this 130.08, so they could move into the 129.40 area and then get a bounce. But there is the possibility that the bounce is just forming here, so where this price can go then. One possibility is that we trade to the extension short, and then we have to see what happens there. And that level I have already indicated last week would be this 130-160 area with a stop above the all the way halfway back here, so with a stop above 130-60. However, we have to always think that when the market breaks longs and then shorts in its move one after the other, then there is always the possibility that price retraces multiple times these levels, these areas. So it's still possible that we go much higher, and maybe we go and test this 132.41, and potentially we move higher into this 133.55. so we could actually move in the area between 32.40 and 33.50 again. And so next week I'm going to provide you with the signal of the start of this moving high, which would be again the violation of the sequence of measure move lower here, and I'll give you the exact price. Moving to the dollar index, not too much to say about it, but probably the fact that this move higher needs a correction here, and the possibility of a correction could actually come into and be contained into this level of support, 81.70 to 82.10, 82.11. Moving to the S&P500, I think the S&P500 is showing us the willing to start to move lower here, and that level that I've indicated last week, that 16.16, somehow acted as resistance. Indeed, the price, the high was 16.14, so not completely 1.5 pips here, ticks here, sorry, points. And but what we need to look at here is to see whether price is able to confirm this move lower, and for this we will need price to move below 1567.25, and this would be, or 50, and this would be our signal to go short with our confirmation for our confirmation breakout, and with a stop above the 1614.75. And this will be the setup that you'll see in the newsletter this week. And to conclude here, I think we are seeing a potential double top here in the US versus the US dollar versus the Canadian dollar here. But we need to be very careful. We know that in the 4 hours the sequence of measure move higher failed, but we had a busted setup and a potential double top. So the level I'm going to watch, and I'll show you on the daily chart here, is going to be all the way halfway back, and this is going to be my entry as well below 104.72 with a stop above highs, above the even the recent high at this point, 05.54. This is going to be my trade, taking alpha out at the first when we have a gain which equals our risk. And I want to show you on the 4-hour chart what we had. You will remember that we had a sequence of measure move here, and we had the second last measure move was this 104.40 level, supporting price into the first target at this 103, at this 105.10, and then again 105.45. And the next sequence in the next measure move in this sequence failed, as you can see clearly here. It failed when price came below this level, this red line here, which is the 105.13, but eventually price went to test the second target, and we saw participation at those level again. And last week we did not trigger our short, and price continued higher, and eventually the selling came again at those second target levels here. So it means that there is participation on the downside, but it's profit taken so far. So in order to confirm and have program trading start trading this market on the downside, we need to actually make sure that this sequence fails. And as we can see on the 4-hour chart, it has failed already, but still on the daily chart or the larger 4-hour chart, I see still support. And until we get below this 104.72 level, then I wouldn't go long this market, because there is still the potential of a continuation higher. So below 104.73 we can put a stop above highs here, or there could be a better entry as well, but that would require the need of being there on day trading. And I'll explain these kind of entries in my next book, low entries techniques, low risk entry techniques for in the modern markets, and this is going to be my next book. So I hope this video is useful. Check the setups in the newsletter, and I wish you a great trading week next week, and all the best. Bye bye.